All right, so we're going to cover the BIITC tax credit. This is a complicated one, but incredibly valuable. So we'll talk you through the ins and outs of that. The employee retention tax credit, also incredibly valuable in Leanna's expertise over the last year or so. PPP round 2, and then some additional items that are relevant and timely right now that can help you with cash flow or investor conversations. So I'm going to stay quiet. I'll jump in every once in a while to take the pulse on things and see if there are questions, but I'm going to turn it over to Angelo and Leanna now. You guys want to introduce yourselves real quick, and then I'll control the slides moving forward.
Leanna, me first?
Go ahead, Angelo.
Great. Hi, my name is Angelo Politis. As Sarah mentioned, we've been working with Fast Forward and a couple of the other incubators as well. It seems that we gravitate toward Fast Forward. It's a much more robust and an active group than some of the others. We're very grateful for the relationships that we've generated here. Working with Mark and Rick has been a pleasure. There's a huge interest with regard to this bio investment credit, and the state has taken its responsibility very seriously as well, and it created, through the legislature, it actually sort of created a bureaucracy that's not easy to get through. And so what we found is that within Fast Forward and within the legislature, there are folks that know this stuff in and out, the nuances and what to pay attention to and what not to pay attention to. So we think that this is super valuable, especially to investors, where you can come in and return some of their investment right off the bat, assuming they jump through the hoops and dot the I's and cross the T's. So as far as me individually, I'm a tax partner. So we look at the tax returns and we help with tax compliance. We also help with setting up the companies and looking for things like Section 1202 qualified small business stocks and things of that nature. Leanna, I'll turn it over to you and let you introduce yourself as well before we get started.
Thanks, Angelo and Sarah and Mark for hosting this. I'm Leanna Steele. I'm a manager at the SC&H Accounting Solutions Department, where we do all manner of outsourced accounting and consulting for a pretty wide range of client and business types. But we do have a special place in our hearts for the startups from Fast Forward. And I personally have been able to work with a couple of dozen startups that have come through the Johns Hopkins Fast Forward program through the last 4 or 5 years. It's always refreshing to work with the startups because there's so much innovation and enthusiasm and that great energy. So I've really enjoyed it. We do all kinds of different consulting with supporting clients on these different COVID features and grant reporting and compliance around all those different features. So thanks so much for having us today. I'm looking forward to this.
Thanks, Leanna. Just real quick, everyone, I did put our email addresses in the chat, and I am going to monitor the chat. So if you have questions, that's probably the easiest way. Like, pop something in there, just say, I have a question, and I'll pull this up and we can address it as we go. So Angelo, I'm going to turn it over to you. Just tell me when you want me to start flipping through, but I'll start with the overview slide.
Great. So I'm catching on to the Zoom stuff. I've yet to catch myself muted and try and speak. So far so good. I think I'm 2 for 2. So the bio investment credit is different than many of the credits that we're familiar with, right? So if you have an individual tax return or a federal tax return where you're trying to get research and development credits, which is what many times the biotech companies do. If you're working with the research and development credit at the federal level, there's no limit at the credit. If you qualify for it, it reduces your income taxes, and then you sort of move forward. If you don't have income taxes, the federal allows for some of the payroll taxes to be offset by research and development credit, but there's no limit to how much you have. If you qualify for it, you get it. With the bioinvestment incentive credit and with many of the state credits, there is a limit to what is funded. So the way this works is that the state sets aside on an annual basis a dollar amount that will allow for the pot, if you will. So in 2021, we have a $12 million pot. And people who apply for this $12 million or a piece of this $12 million, once we run out of the $12 million, that's the end of the game until next year when it gets refunded again by the state. And so it's a little bit different than we've got. And so we wanted to sort of focus in on the first come, first serve issue, right? So it drives a lot of what folks do. Now, there have been some years when this credit was undersubscribed and some of the funds went back to the coffers of the state. That hasn't happened for the last bunch of years for a few reasons. One, because this is gaining in popularity. And it's a really, really nice credit to have. So just recognize that it is funded to a limited amount, in this case, in 2021 for 12 million bucks. It's a fairly sizable amount when you think about the limitations and the number of investors that can get it. So it's not like, you know, you have to run to the front of the line, but at the same time, you don't want to wait and dally too long. Our suggestion is that you follow the timelines, and we're going to go over what those timelines are. They will start in August and then sort of ramp up for September. It will be one of the slides that we hit a little bit further down the road. The amount of the credit is 33% of the investment. So there's a couple of key things here. One, the company doesn't get the credit, right? The investor does. And so when you think about these things, if you're getting a research and development credit or you're getting a grant of some kind, typically the company gets those funds. In this case, that's not the way it works. The investor gets the credit, and he or she can has to file a Maryland return in order to get the funds. So, so that's a key point as well. So the amount of the credit, it depends on the amount invested. So you have to put in at least $25,000 of an investment. And if everything qualifies, if the company qualifies and the investor qualifies, you can get 33% of that back. And so you're saying, well, shoot, Angelo, I don't live in Maryland. In many cases, the investor can be from a foreign country. You say, well, if I'm going to put $100,000 in the company, how do I get that money back? And so the credit is actually in the form of a tax return filing. If you don't have a connection to Maryland, or you don't otherwise file a Maryland income tax return, you would file a Maryland income tax return. The tax liability would be zero. And then following the compliance regulations, you would get your refund back from the comptroller of Maryland. So the administrator to the credit is actually the Department of Commerce, and the person who writes you the check is the comptroller of Maryland. So you're praying to two different gods, lowercase g. You're praying to two different gods as to how you get your funds. One, you talk to the administrators and you qualify and you get a certificate. That certificate you then present to the comptroller of Maryland with a tax return, and they will write you a check. And the check is written to the investor, and the investor has to qualify and provide the documentation. So the amount of the credit is enhanced if we meet certain criteria, and that's the criteria that are on this slide. There are 3 or 4 counties in Maryland that are economically advantaged with regard to this credit, and the amount of the credit that goes to the investor can actually be increased to 50%, in some cases 75%. And if you're in something called a RISE zone, so regional institutional structure enterprise zone, I forgot exactly what RISE is, but certain institutions have benefited from this as well. Johns Hopkins and our location at Ashland is not one of them. I don't believe that the one in Remington is either, but know that
the Baltimore location is an opportunity zone. 1812 Ashland is. but Remington is not.
Okay, thank you, Mark. So again, if there are questions as we're moving forward, just hit them on the chat and we'll make sure we pick them up. But this particular slide is key for a couple of different reasons. One, to point out that the investor is the one who gets the credit. Two, that the credit is limited. And three, that there is a limitation on the upper end of the credit so that any particular investor can't get above 250,000. So Sarah, let's move to the next slide if we don't have any questions. So the way this thing works is that the company first has to meet qualifications to be a qualified Maryland biotech company. So a QMBC, and you'll see this several times throughout. So when we refer to QMBC, we're talking about the company itself. And we meet certain criteria. We provide the Department of Commerce information that can be hefty from time to time, but we meet the research and development items that are listed here for innovation, proprietary technology that is biotech related. So next slide, Sarah. So in order to get the credit, we have to meet criteria that has been put out in the legislation. So this criteria is in the law. It's actually also in regulations. And the Department of Commerce does a great job at giving you links to the resources, and will give you links to the law itself and also to the regulations that the state has put into place. So among the regulations as to what the company has to do to qualify to be a qualified biotech company, a QMBC, we have to have headquarters in Maryland, base of operations in Maryland. That's a key. Obviously, the incentive here is that the state wants you to be here, and those two items are particularly important. There is the third bullet point down. It says one non-executive employee performing research. So that's a big key item as well. A couple of important things to note is that that person has to be an employee. We cannot hire a company to do our research for us and meet this criterion. So they have to be an employee. We have to pay him or her wages. They can't be 1099s. We can't hire an S corporation to do that work, even though that person may be the same person who actually does the work. There is a minimum funding that is required in the capital, and that $100,000 is not eligible for the credit. So the first $100,000 in is required to meet the QMBC, but that person or structure cannot benefit from the credit for the first $100,000. The other ones are somewhat self-explanatory. The certification by the secretary as a QMBC is incumbent upon filing the paperwork, and we're going to come across some of that in one of the slides, I believe. Any questions at this point? Okay, let's move forward. So this is sort of a cool slide here, and it's in response to some of the prior year issues that had come up, in that sometimes it was a guessing game as to whether the company qualified or not. The Department of Commerce, and specifically the people that administered this particular credit, were responsive to the companies that said, hey, we tried, we didn't make it. You pointed out that we needed to fix something. So the Department of Commerce, in its wisdom, and listened to the people that were affected by this, and now allows for a curative period. For example, if we file and don't have anybody employed, as we mentioned on the prior slide, within 60 days you could hire somebody, and so you would bring in the money, then use that money to hire somebody and cure that particular item if we'd failed that criteria. So this is the state actually listening to its constituents and making this more available to more companies. So please know that there's a curative period out there, that if we do fail one of the items, that we can fix it within a requisite period of time. And the 60 days we think is more than reasonable, and we're grateful that this is here. Next slide, Sarah.
Angelo, just point out real quick that oftentimes one of those criteria is dependent on actually the investor funds coming in. So that's sort of the key reason this is built in there, right? You need the investor money to hire the employee, chicken or egg situation. So this solves for that.
Yes, perfect. Thank you. So now the investor. Let's focus on that. So we're qualified as a company. Now the investor also has to qualify, and he or she has to provide certain information as well. The fourth bullet point lists out the counties where there's an enhanced amount of credit that's available. I don't believe that Hopkins has any places there, so we typically don't see too many particular qualified companies that come out of there, but this is an effort within the state and the state legislature to spur investment in biotech companies in those 4 particular Maryland counties. As we mentioned earlier, the $25,000 is the floor, and the investor can obviously put in more money than that. And the more money they put in at 1/3 of the credit, the more credit they can get back. So one of the curious things that has happened is that the state doesn't care where the money's coming from. And so it's a way to draw funds from other countries or other states into Maryland so that these Maryland headquarters companies can benefit from investments from other places. One of the criteria has historically been is that if we have a tax haven country, in other words, there isn't any taxation or tax reporting, that investors that are from those particular jurisdictions are not eligible for the credit. So one of the things that an investor will testify and will state in his, her, or its investment information is that it files a tax return. The state can come back and ask for a copy of that tax return, although I'm not sure that we've ever seen that. But if you say I'm from the Cayman Islands, we don't have any taxes, and it is a tax haven country, then that investor is not qualified. But if you're in Japan, or if you're in Singapore, or if you're in the UK, that investor qualifies as well. One of the things that we've seen that has been a bit of a problem is that the state of Maryland, the person who pays us, will typically ask for a social security number or a federal US ID number. And the filing of those forms with the comptroller's office can sometimes be a bit of a challenge. We've been able to contact the comptroller. They now are much more aware of this sort of glitch, if you will, and that they ask for the forms to be electronically filed. If you don't have federal EIN or a social security number, sometimes it's difficult to file those forms electronically. The state has sort of gone out of its way to make it accommodating for those particular situations. In the past, it's been a problem. We think it's still going to be a problem, but maybe less of a problem. So foreign investors are a target for this particular credit. Sarah, next slide. So going back to the company itself, there is a Form B that the qualifying company has to submit, and on that particular form is the sort of notorious question 11, where it asks for a series of organizational documents, a listing, a business plan, documentation of the experimentation activities, and things of that nature. So the state has been very, very good about trying to be as explicit and as thorough as it can, so that the submitting company can get this sort of the first time through there are situations where the state comes back and asks for clarifications. So among the things that we, SC&H, has been particularly impressed with is the technical skills of the people that are reading the information that's submitted. And they have beefed up their administrators quite a bit. It used to be basically one guy doing the whole thing with administrative help, but he has sort of graduated, and there are a group of folks that are super responsive at this point in time. And so if there's something that that might raise a flag, they typically will reach out to the applicant and get that cleared up. Next slide. So now going back to the investor, I'm sorry for flipping back and forth, but it is important to make the distinction as to who's submitting information and why they're submitting it. So investors would be submitting these A forms. The company will be submitting the B forms. And then within the A forms, the investors, depending on the type of entity, would file an A1, 2, or 3. Again, this is explained on the Department of Commerce website. And we frequently go back to that Department of Commerce website for clarifications and FAQs.
Angela, real quick, we're going to get into the timeline on this here next, but just to clarify for everyone, because this is completely nonsensical, the Form B, which is the form the biotech company has to fill out, comes first. Form A, which is the form for the investor, comes second. So just, you know, more bureaucracy that makes no sense. Just keep that in mind, the order of these things.
So going back a few years ago, and again, before we came kicking and screaming into the digital age, there were actually people that would stand in line in front of the office in order to be among the first people there. So the first things first, this August 23rd is a deadline for the company. It's sort of important to get the company qualified so that the investors can get into the queue. The investors would then submit their applications starting on September 7th. Again, because it is a first come, first serve, that we would encourage people to apply as early as they can. So I think we running sort of late on time, so I want to make sure that we leave time for the other stuff. So again, these slides are going to be available to everyone, and I think we've covered most of this.
Maybe, Angelo, just take them through the process for the investors, because the Form B, submitting that is pretty straightforward, but the timeline for the investors is sort of two different things. And
Great, thanks. So the investor and its Form A should go into the company. The company would then get a receipt, if you will, and a username and a reference number. And that username and reference number are super important because that will be used later on by the investor to get into the queue. And I think on the next slide, we talk about the timing for the investment and the notification that to the state that the investment has been made. So again, so from September 7th to September 27th, the investor gets its username and reference code. And on the 28th, you submit, the 28th or later you submit, the investor would submit and file within 30 days from the date when Commerce issues the credit certificate. You make the investment, then the investor notifies the state that the investment has been made within 10 days. So submitting proof back and forth is important, but having that certificate is what gets you the credit. So you have to jump through the hoops that are listed here. They're also listed on the website as well.
this is important because if your investors are going to go for this and they aren't familiar with it, they'll often require a little bit of coaching from you on how to do this. So being able to tell them, you know, this is not a guaranteed thing. You have to be first come, first served on the website. This is all pretty valuable and important information. So as to be upfront with the way this works with your investors and potential investors.
Okay.
And here's the link. to the commerce page. I did just put this in the chat as well. Does anyone have questions about the BIITC tax credit that they want to, oh, Angelo, the only other thing that we had on this that was convertible debt, maybe just touch on that real quick, because that is something that a lot of these guys have.
Yes, ma'am. And it's a feature that we absolutely love, because there was always sort of a jockeying back and forth. The company wants the money, and the investor wants to put the money in, but we want to wait until we get the certification. And the September 7th and September 28th deadlines are hitting. So what this allows is for the company to initially receive debt from the future investor, and the investor comes in as a creditor. If that loan is within 1 year of the investment, then the conversion can take place. The investor gets the credit. The credit gets converted into equity, and everybody sort of wins. The company will have had use of the money in the meantime, as we're waiting for the certification and the deadlines and all of those kinds of things to meet. So this is an incredibly flexible tool, one that we like a lot. There is, as you can see bolded there, if the debt is more than a year outstanding, then it would not qualify upon conversion of the BIITC. So let's give a quick example. So on June 1st, I get somebody who says, I'm going to invest $100,000 in your company. I really want the $33,000 worth of refund back, so that net, I'm only investing in you for $67,000. So here's your money. I know you need it. Let me give it to you in the form of a convertible debt. So the investor puts in debt and is now a creditor. We jump through the hoops and make our company QMBC qualified. The investor, starting on September 28th, gets certification. And within 30 days of that certification, we convert the debt to equity, and everybody's happy at that point in time. The 10 days get notified, but the investor notifies the state, and we've got a good transaction. And upon the filing of the return, the investor would get his or her $33,000 from the comptroller. So this convertible debt is often used, and as long as it's not within a year or more than a year, then we're good to go with this. So basically, on the convertible debt. Go ahead, Sarah.
Angelo, can I ask a clarification question about the limit? Is it limit per startup of, let's say, 250,000 versus limit per investor? Like if you're a startup, you only have up to 250,000 of your total investors receive this credit in a year?
The investor limitation is 250,000.
But is that like, let's say I invested in 2 startups as an investor. Could I max that out for both startups?
Yes, sir.
In theory, but if a startup has 2 investors, they couldn't both investors couldn't max that out for the same one startup company. Is that correct?
They actually could. So the startup company, for the company itself, there's a $7 million limitation. And so we can go up to 7 million.
Okay.
And the investor per company, per qualifying company, can get up to 250,000.
Good question, Mark.
Super valuable. Thank you. Yeah, it's buried in the slides and it's buried in the website, but that's a good example. The type of investment is not limited. You can have an LLC. Typically, LLCs are treated as partnerships, but can make elections to be an S corporation or a C corporation. The type of equity that you own would not be a problem for this credit. So, Leanna, I'm way over my time.
Okay.
Sorry.
We're good. Does anyone have questions about the BIITC that you want to clarify? You can put them in the chat too, or email any of us.